Welcome to Turning Hard Times to Good Times. I am your host, Jay Taylor, and I'm speaking to you here from New York City in Queens, the 19th day of May, 2020. I want to thank each of you for listening to this show and making it one of the more popular shows in the Voice America Business Channel. And I want to invite you to keep your questions and comments, whatever they may be. Send them along to questionsfortaylor@gmail.com. Questions, the number 4, Taylor@gmail.com. And we do want to thank our sponsors, because without them there would be no show. Today's sponsors are RN Resources, Great Bear Resources, Hannon Metals, Irving Resources, Novo Resources, and Sitka Gold Corp. Before I get to today's show, let me pass along a few thoughts of my own. Michael Oliver is not with us this week, but I'd like to pass along a thing or two that he had to say in his weekend missive to his paid subscribers regarding gold and silver. Michael said that gold is probably the most important market to be focused on now. Many implications, he suggested. And let me just quote a couple of things that Michael said. First of all, he said, and I quote, "Gold has remained stout since the late summer 2018 lows, with teasing quick sell-offs that fool the majority. And this trend persisted whether U.S. stocks were up or down, and despite the dollar remaining quietly firm. MSA has warned those who are fearful of a weak stock market causing gold to trend down that they will be fooled by that false assumption. Similarly, with a constant fear of continued steady to firm dollar. Looking back, momentum registered 2 major breakouts. And you would need to see Michael's charts to be able to see with clarity what he's talking about. But then he said, nothing since that has altered that fact nor momentum's direction. We now offer one last buy trigger level. This one based on quarterly momentum. Trade up to 18, 19, and 50 cents this quarter, and you can consider that MSA's last gold buy trigger. That will be MSA's last gold buy trigger. That is 1819.50. And then Michael continued, he said, we suspect any further gains by gold will be dramatic, sizable, and sudden, not a continuation of the arm wrestling yet persistent uptrend of the past 2 years. End of quote. Regarding silver, Michael has also, what he has to say should gladden the hearts of the silver bulls. In his May 3rd weekend report, Michael defined 2 monthly momentum breakout levels. Those trigger numbers were $15.20 and $15.55. The May 7th action engaged those buy triggers, and the launch for silver was ignited. And I quote Michael, he said, price has since also achieved a key level, namely breaking back above last month's high at $16.30. By clearing the $16.30 level, silver punched back above that resistance and, in Michael's view, is now rapidly heading back to the $19 level. But he doesn't think that set of prior highs, either side of 19, will halt the advance. Instead, annual momentum argues, Michael says, that reaching there again will likely engage the final trigger for silver. Michael noted that a trade above $19.42 this month is a massive annual momentum structural breakout. Michael expects that this silver surge, especially if it tags that annual number soon, which he fully expects it will rapidly drive silver into the very upper 20s, and perhaps there it will want to pause, congest, before moving higher from that level. So regarding the gold shares versus gold, Michael's work also revealed that the shares are now getting the upper hand over gold bullion. Well, there isn't much to dislike if you're a gold or silver bull from what Michael has to say, but that said, I would like to comment on a question from a listener to this show named John, who is an ex-scientist, and he admits to not being well-versed in things financial. But paraphrasing John, he is concerned that even if your gold shares rise dramatically, their price is denominated in dollars. So when you sell, what good does that do if you're going to own something that isn't worth very much and is declining in value dramatically as the dollar is rapidly losing value? And that, I believe, will be the case given the trillions of dollars that is being printed and created out of thin air by the Federal Reserve and other central banks. But to that, I would answer John by saying you don't have to hold dollars. You can take the dollars from the sale of your gold stocks and buy gold, and you can do so in the form of an ETF like OUNZ, which, as Axel Merck pointed out last week when he was on the show, you can easily take delivery of gold that is backed by your shares of OUNZ if you wish to do so. And by the way, Axel Merck will be with us in the second half of today's show, and I might ask him to briefly comment on the process for taking delivery again, because I think it's a very important issue in this day when we can expect that the fiat currencies are going to lose value very rapidly. I would mention that, of course, when you sell your gold shares, you will have a tax event, unless, of course, you're holding them in your IRA. In that case, you won't need to face a tax event until you start taking your money out in your retirement. Another listener named Steve, who subscribes to my letter and to Chen's newsletter, asked if I would recommend a third newsletter writer that covers the gold mining sector. And I could do so, but it is important to know who to recommend. It's really impossible to know who to recommend unless I know a person's investment objectives. Any of the newsletter writers I work with at the Metals Investor Forum, like Eric Coffin, Gwen Preston, Joe Masmader, John Kaiser, Greg McCoach, Brian London, and of course Chen is there as well. They're all very good, but each have their own unique investment styles and focus. For example, some are more risk-averse than others, while some offer the 10-bagger type long shots that certainly inherently have more risk. But what I should actually do sometime, I believe, and I actually have had some of them on my show in the past, but perhaps have my colleagues from the Metals Investor Forum come on this show and explain their investment objectives and share that with you, because I think that would be valuable advice. It's important to subscribe to somebody whose perspective is similar to your own, so that you're comfortable with their philosophy. Moving on to today's show, I've titled the show, Can You Prosper During This Gargantuan Economic Decline? Axel Merck returns, and Lynn Alden appears for the first time on this show. When gold was removed from the monetary system in 1971, it opened the floodgates of money creation by a legal, though I would posit immoral, counterfeiting operation headed by the Federal Reserve Bank and all other central banks around the world. They all create money out of nothing, although, of course, the U.S. and the Federal Reserve, having the world's reserve currency, can do so more aggressively and more extensively than any other country in the world at this point in time, unless that changes, and that may be a topic that we'll broach this afternoon as well. In any event, the result of this massive money creation has been consistent currency destruction and credit bubbles that are blown up to the point where the laws of nature stops, such as in 2008, 2009, when the wheels fell off the credit expansion because the central bankers push things to the point where it breaks down. And then what we get then with a new creation, another cycle of money creation, is a massive transfer of wealth from the productive sector of the economy, the middle class that actually produces things that add value to our lives, to the people that control the monetary system, namely the Federal Reserve, the banks, and the government. So we go from the productive sector to the parasitic sector, and ultimately we're all the worse off for it. Well, even before the coronavirus pandemic wreaked havoc on global economies, we were in for another economic recession, bound to be bigger than that of 2008, 2009, simply because the credit bubble that was blown by the Federal Reserve after 2008 was the biggest yet. So that when the bubble burst, when it was bound to burst, the losses in financial assets are certainly bound to be the biggest yet, even larger than the catastrophic declines of 2008, 2009. So far, we haven't seen that, of course. The equity markets are holding up quite well. But with the sudden event of COVID-19, job losses are now more extreme than anything ever seen in America, including that of the Great Depression. But remember Ben Bernanke, who has always claimed that the Great Depression was caused simply because Fed chairmen at that time were not as smart as he is, didn't respond quickly enough, he says, that they didn't respond quickly enough, and in fact started raising rates when they should have been lowering them. Well, Ben thinks he has all the answers, right? So he's exploded the balance sheet, the bank's balance sheet, the federal bank's balance sheet, and we have this massive bubble that is now breaking down again, a little more than 10 years later, 12 years later, and it's breaking down again before COVID-19. And we'll get into the reasons I say that, and Lynn Alden will certainly help us understand that as well during the second segment of today's show. And of course, 2020 hindsight is wonderful. It allows you to point fingers at others and not focus on the best way to move forward. What Dr. Bernanke and all Federal Reserve economists fail to recognize is that the Fed is the manufacturer of these bubbles and is therefore responsible for the massive losses suffered by average people and smaller businesses, to the benefit, at least to the redistribution of wealth towards Wall Street and their pernicious government bedfellows. Likewise, as parasitic governments grow at the expense of the productive sector of our economy, when the Fed starts blowing the next bubble, that seems to be the cycle that we're still on. We shall see if it continues on once again as this bubble nears its end and finally comes to its conclusion, aided and abetted by COVID-19 for sure. Indeed, as we enter this section, this decline, there are many who believe, some who believe, that America is reaching its fourth turning in American history. The other fourth turnings in America's history so far, the Revolutionary War, the Civil War, and World War II. And so many are believing that what we are facing now with COVID-19 and the destruction of our monetary system is akin to and as significant as those other major turning points in American history. What we hope to accomplish on this show is to provide some help in turning these impending hard times into good times simply by alerting you to what is likely to lie ahead of us in the future. No one, of course, except God Almighty knows for sure what is lying ahead of us, and I would also suggest that He has everything under His control, but that, of course, is a spiritual element that everyone has to decide for themselves.